Hey guys, Mike here. So another jam-packed video for you with all kinds of stuff in it this time, right? One, obviously, we finally got OPEX out of the way, $4.2 trillion of options expiring. So that was massive. Also quad witching, happens 4 times a year. So that is done, right? And so we get to see where this market moves from here. I am going to show you what I was talking about. If you saw Thursday's nice video about that big explosion that happened Thursday, one thing that helped cause that, like fuel on a fire. We're also going to talk about a couple things you need to look at for Tesla as well. And then I'm going to let you hear from Jim Cameron, who manages a volatility index. See if you agree with what he's got to say. I'm not sure if he's right or not, and I'll actually have some charts tomorrow to kind of say, maybe, we'll see. I mean, I'm not going to argue with him. He's an expert in that field, but it's like, we shall see. All right. Now, what we were talking about when we were talking about Thursday, like what in the world happened? What was the jet fuel? And that's what it was. Thursday for that big move up, and it's simply call volume, right? We said another record high. It was the most SPY or S&P 500 calls in history, right? That day. You can just, look at that. Like everything is a new one. It keeps eclipsing the other one, right? So all-time high. Plus, if you look at this pie chart, it started on like Wednesday, actually. If you look at this is the 615 XPX call volume. And this is for gamma squeezes, right? And when you look at the 615, look at that big piece of the pie. This is obviously pie makes up 100%, right? And then look at 616. So one DTE option that was happening. And then that day, on the day of 616, it just exploded. And we're talking about the big boys, not us. We were buying, but not like them. And we don't know if it's the dealers, who it was. But that's what you see if you ever see a move that looks just absolutely insane where everything is green. That is what is happening, right? Big money's moving in, especially driving it up with call options. And I don't know if anybody noticed, man, but to me, I was thinking NVIDIA options were looking really expensive. And when you go off the delta here, you can see we haven't been like this since last November. But again, people are still buying, right? This is what helps move this up. This is what helps market makers. They're the ones selling the options. They're the one hedging by buying the shares and stuff. And so this is some of the stuff you got to keep in mind, which we'll know after the fact of what's happening. When you see moves like that, and we've seen, what is it, like once every 3 or 4 weeks, you see that where just every sector is 1% or more. Stocks are going up 5, 10, 15%. Just off the charts, right? And there's never really a reversal in the day and stuff. And so that's what's happening. Now, listen to this quick interview. Let me know what you think in the comments. I'm curious, especially if he's talking about, he'll use the word vol a lot. That's volatility is what he's talking about. That's kind of fun. He manages and stuff. And so, you'll see this guy on different shows and stuff, people interviewing him. But check this out, because he's talking about, obviously, OPEX was Friday, and this is what he was talking about leading into it. So this was an interview he did Thursday night right before the OPEX and what he expects to happen.
June OPEX, we got to start there. Why are we seeing this move all of a sudden? The scale, the size, the convexity, it's flows. It's the flows, stupid. I want to be clear. Quarterly OPEX, higher skew, vol pinned, going into the last 2 weeks in that window of kind of strength, right, is a recipe, is all the perfect ingredients for that final squeeze. We hoped for it last month, but June OPEX is the perfect place to do it. And we've been looking for 3 things, right? We've talked about this ad nauseum. And it's the reason last month when we were on, we were very adamant. You're like, do you short this here? I said, no, but what you do is you buy calls, you sell stock. Why did I say that? Why did I say buy calls, sell stock? Because I said the next move will be market up, vol up. Fixed strike vol up. And that is exactly what we've seen. 2 months out, today straddles in August are up $10 in the S&P 500. They have the further out you go, that vol is just too low. You're sliding to too low a vol, especially given the realized vol. And guess what? You're seeing what you see in these blow off tops, faster, quicker moves as you squeeze out the shorts. We've been looking for 3 things. I've been very adamant. 3 things that you need to see for that blow off top to finally play out. 1, changes in sentiment and positioning. Guess what?
We got it.
I just heard you guys talking about it all makes sense. Market should be up. No offense, Joe J. Everybody's saying the same thing, right? The NVIDIA move, it all makes sense, right? Like the market should be up. Yeah, that's not what people were saying 10% ago, right? We've rallied 7% almost in 2 weeks. We are up in 2.5 to 3 months. We are up now 16, 17%. The whole way the Fed has begun to be hawkish. The whole way liquidity which is the lifeblood of markets, has gotten worse. You talked about Europe, you talked about Asia, you talked about Australia, and how they have a lot more work to do, and they are now pivoting to being more hawkish. Yes. There's about, everything made sense based on your conversation just earlier, but the one thing that didn't make sense is Jay Powell was really hawkish, but yields are down. These types of divergences matter. Don't lose sight of the ball. Don't lose sight of what is actually happening under the hood. 3 things: sentiment, positioning change in. 1, just more potential realized vol as you push this thing higher, right? We are now, like I said, 7% higher than 2 weeks ago. That is pulling something off the ground that can be increasingly dangerous, especially based on valuations and liquidity and the macro realities. But lastly, vol up. Vol supply is becoming unpinned. All the calls, short interest, people wrote calls against all their stock, all the selling of vol that's been happening. It is now being squeezed out by stock replacement, how cheap these calls are. There's a fundamental basis for vol bid out there, and guess what? You're seeing it. We're seeing big block orders coming in, buying vol in all kinds of different parts of the distribution. Vol in dealers' hands is no longer pinned. It is quickly moving away from that place, and that is a dangerous recipe.
And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Like I said, I'll have some charts and stuff tomorrow. I'll put it in tomorrow's video when he set us up for the week and everything about that. And maybe he's right. Maybe it does get unpinned. We'll see or whatever. I mean, obviously, yesterday or Friday, I mean, the VIX got crushed again. Now it's like 13.43 or something. I mean, we'll see if this happens. Obviously, as I said in Thursday night's video, I mean, things are overextended. I think we all know that. Things are overbought. They've been on these crazy runs, like 13, 14 days in a row, some stocks. And so, we're due for some kind of cool off or pullback period, of course. So we'll have to see about that. But, the one thing that is happening is, obviously, if you're unfamiliar with this, right now you're seeing multiple expansion, right? And we get to see how this plays out. And I can't wait to see the next earnings, really, especially the one after that, because what's happening is when I say multiple expansion, PE, right? So P to E, price is the stock price, right? Well, that's obviously growing exponentially. Well, earnings, of course, we all know we're not doing that, right? I mean, most margins aren't looking good. One of the things even helping them hit these earnings calls, if they're hitting them at all, is 1, inflation, because they're charging more than what their actual input costs are. That's 1. And 2, the bars are really low, right? Well, now the bars are starting to come up, right? And inflation supposedly is coming down. So we'll see how that works out. But and this is normal. This is what you see when you get this multiple expansion. And the question is, when earnings start to come along, especially for these AI companies like NVIDIA, for example, at least they said, hey, we're going from 7 billion to, what was it, 11 billion? Okay, great. But a lot of these other AI companies didn't say that. Their P on the P to E is going higher and higher, but the earnings, they're not even really forecasting anything, right? And so it's like, really, that's going to be interesting to see how the market digests that, and then who becomes the winners and losers, right? That's what we get to see and stuff. And so, when you look, I'll show you a prime example, and this came out today. And this is P to E will be the blue line. As you can see, obviously P to E was crushed in 2022, and then in October it started lifting off, right? Because prices of stocks started skyrocketing. And then below that is the earnings per share, right? And so even as the PE was expanding, the earnings per share was going down, and then in March, all of a sudden, it started to finally start to rise back up. And so we're going to get this, find out, starting, I guess, the end of next month, I think, is when we start earnings calls again, what's going to happen, how one, how earnings are going to turn out, 2, is how the market's going to digest them if they aren't what they expect, or they're just going to wave it off and say, oh, we're still in multiple expansion, we're good, we know it's going to take a couple quarters for this to start happening or whatever, or a year, whatever. That's what we're going to have to figure out and stuff. Now, obviously looking at, people talking about rotation and areas of interest and, where to put money and all that good stuff. And when you look, obviously I'm talking about the Russell today, the rest of them I'll talk about tomorrow. Looking like a head and shoulders and hour right here trying to play out. There's your neckline right there. So if it comes down, we'll see what happens. Again, the Russells is the small caps, the $1, $2, $3 billion companies type deal. And so this environment is not the best for them, but the market don't really care about environment right now. And so, when you look, we'll see if this plays out or not. What do you see happening right here? And maybe this is a warning, of course, but as it was going up, the RSI was saying, hello, don't think it's going to happen, right? And so now you're starting to see a pullback in it after money started flowing into it. And so that's a couple things to pay close attention to see if that continues. But remember, what was the number? The magic number it needs to close above, but it still is not done. 189-ish, okay? And it's not a made-up number. If you just go back and go to your left right there, you'll see 189 rejection, right? 189 rejection. 189 rejection, 189 rejection. So multiple times you need to close and get right up in here in this area right here, which is the supply zone right now. And let's start having some time in there, turn that in support, and then we move up and we start talking business, okay? But until that happens, it's pretty much all for nothing right now. So we'll see what happens. We'll see if they keep doing it again. A lot of the move up, you see the parabolic move right up there from like 171 to 187 was what? Short covering. I showed you those short coverings, all right? And then once that's done, then you get to see what kind of index we got going on here, right? Now, talk about breadth, right? Or what do we got? Here's the stocks above 200-day moving averages. And, obviously tech is killing it. But when you look for, maybe stocks you want to start looking at that haven't got any love right now, if this is truly a bull market, you got energy sitting at 26%. You're sitting there with healthcare at 52%, utilities at 55%, consumer staples at 54%. What else we got? Financials at 53% versus like techs at 91%. Consumer discretionary is 85%. Industrial was just crushing it, 83%. I was actually surprised it wasn't higher than that. Since the XLI, I believe it is, I don't think it set a new all-time high. I have to check. Maybe I'll include that tomorrow. But also you got materials, and watch materials because, my thought process is simple. If China, which they're going to announce probably the next 24 hours, if they actually are going to start doing major construction projects again to stimulate their economy, and when they do construction projects, they do it big, what are they going to need? All the materials, right? Lumber, copper, you name it, to go into that. So we'll see if people start flooding into those stocks as well. And obviously Tesla, a couple of things to watch out here for. One, obviously it's left a bunch of gas behind. It still has a problem in that supply zone up there, but it was green on a day where pretty much everything else was red. But look at these moving averages. You're fixing to have your 50 and your 100 moving average cross the 200 moving average. That is not a bearish thing. Doesn't guarantee it's going to continue to go because it has had a parabolic move here, but that is not a bearish thing. It's been a while, as you can see on the chart and stuff. And now, of course, when you look at this right here, like I said, left behind plenty of gaps, and this is a gigantic move up. And you can see that RSI. I mean, it's always fun to look at on the daily. You can see the MACD is as stretched as can be right there. And here's the weekly. But look at the weekly. The weekly, and that's what I'm saying, when you look at longer term, it's not overbought, right? That MACD is crossing the zero line, which is actually a bullish thing, right? The one thing to look out for, though, another thing, is understand this moves parabolically. Like it has these major moves up, and then of course what happens? It has major moves down, like 27% in 25 days. What was this? 29% in a month. And what happens is when it starts to move down, when big money starts to take profit, people get freaked out and they start to panic out and start selling and stuff. Like, oh, I don't want to lose any more of my gains. And then it proceeds to have these big moves down like that in a very short period of time, right? So it goes up and down to both ways. And if it can close above like 264, 265, 300 is in the cards, guys, as crazy as that sounds. But if it comes down, and it's there and starts closing below like, I think 242, 243, or somewhere in that neighborhood, then it could have problems because more people could take profits. And again, I'm not trying to piss in anybody's Cheerios here. I'm just saying that's what people are looking at here. So just keep that in mind. Let me know in the comments what you're looking at. Now, AMD, obviously, RSI is kind of telling us the same thing. While it was moving up, boom, RSI was like, I don't think so. MACD's rolling over on the daily here. What happened Friday? It closed another gap. So it's two gaps down, one left, right? That happened to be the big one. But you see the moving averages all still turned up right there, which is a good thing. And, the thing to look for at AMD is the dip buyers, right? Around like what is it? Between 117 and 118, I guess. And, so many people start buying this thing up because semiconductors are still hot and, they're cyclical, but this is their time, right? So getting that big gap filled, I don't know. That don't seem like it's going to be very easy unless the whole market turns. But of course, could it happen? Sure, of course it could happen. No doubt about that. But again, right now, are you seeing dip buyers, dip buyers, dip buyers, dip buyers? And if this is a real bull market, of course, then that's what happens in a bull market, right? They just keep buying it up because semiconductors are still hot as can be, right? But again, it's another one had a big move, and that's what you guys are looking at, especially going into summertime here, is like the profit taking part of things, right? People, big money starts taking profits, and then somebody's got to come in and dip buy it up. All right, so far that's been the case for almost all these stocks. Tomorrow we're going to look at Apple, Microsoft, just a whole boatload of them. Look at the SPY, look at the Qs, and certain things that we need to be paying close attention to. And another thing, I'll show you a chart that it shows that in a bull market, what I'm going to show you is, yes, this is what you see in a bull market, but then the problem is when you try to compare it to other times, they just don't go back that far enough to really compare to other times. Not saying like this is like other times, but, remember, and to keep this simple, like people say, well, how should I say this? Yes, it definitely could be a bull market, probably is, whatever, but we got to remember, what happened last year? It's just simple. They sold us down too early. As I said last year, I said, beginning of this year, they sold us down too early thinking there was going to be a recession for those who are new to the channel, right? It didn't happen. All of a sudden, we stayed spending. We had a lot more money than they thought we had. And they went, oh, man, we sold us off too early, okay? And so what happened? They're running us back up, and it's the first time it's happened with rates being like they are, right, in our lifetime. And so, because why? Again, if there happens to be a recession later on, whether it's in the fourth quarter, first quarter, whatever, doesn't matter. Guess what? They just sell us back off. And it's happened before. I'll show you a chart tomorrow. This has happened before. This ain't the first time this has happened. Okay, so just keep that in mind. That's all it's going to do. And so that's why you don't have to be in a bear bull camp. You just look at the data and go, okay, well, I'm gonna enjoy the rides up, or whatever. And then when it starts to sell back down, if it does, you go, okay, I'm not gonna ride it back down, or I'll just DCA in, or whatever you want to do. But keeping it simple. That's what has happened, and this is what's happening now, okay? And so, and of course, don't forget the market is telling the Fed, you're bluffing, you ain't doing no more raises, okay? That's how it works. And so hopefully you saw Thursday night's video. If you didn't, I'll link it at the end and stuff. So anyway, and if you want more information, feel free to sign up for the membership and stuff. It's only $7.99, 7-day free trial, where you'll get even more information. So anyway, hope you guys have a good one, and I will see you tomorrow.